Has the car market just gone absolutely mental? This is a video I've wanted to make for a little while now. If you were living under a rock, maybe you missed the results in January of this year. The US and Paris all had massive auctions with absolutely massive prices achieved. All of those were at the super top end of the market. But does that mean the rest of the car market is booming as well? After years of decline, are things finally turning around? Let's attack this. 4 questions. Question number 1. So first up, what's happened to collector car prices in recent years? Put simply, it's a story of decline. In 2025, prices were down 10% on the previous year. 71% of cars fell in value last year. If you wind it all the way back to the COVID, that big peak in prices that we saw, we are well down from that peak now. In the US, prices are 23% below that peak. In the UK, that number is over 40% down from the peak. So maybe we're due a bit of stabilisation, potentially prices rising in 2026. Question number 2, why even make this video now? Why even ask this question right now whether 2026 is a year for the car market to boom? Put very simply, the auction results we saw in January, both at Michelin in the US and also in Paris across the multiple auctions around Retromobile, were massive. I'll give you 3 results that stand out. There were loads more than this, but here's 3. Car number 1 is a Ferrari F12 TDF coming into 2026. The highest price we'd ever seen at auction for that car was $1.7 million. Michelin sold a car with just 68 miles on the clock for over $3 million. Car number 2, Ferrari 360 Challenge Stradale. Coming into this year, the world record was at $600,000. Michelin sold 2 cars. One was a 327-mile car, last one produced for the US market at over $1.1 million. And then sold another car minutes later with 375 miles, but a really nice spec for $1.8 million. Yes, that previous world record pretty much got tripled in one day. Car number 3 is a Ferrari Enzo. Coming into 2026, that car, the world record was $6 million. 4 examples have sold in 2026 so far. Every single one of them has sold for over $6 million. Indeed, the new world record is now just shy of $18 million. Again, the world record has nearly been tripled on this car alone. Now, there are loads more examples I could give to you. Most of those cars there have somewhat justified those values because they are 1 or 2 owners, they are uber low mileage, they have very interesting specs, or they are last of the line for the particular production run or the country, whatever it might be. However, there is a big part of it that is unexplained. Why those prices are so high. Some people have said money laundering, some people have said charity. There's little evidence that money laundering is at play and charity doesn't apply in these auctions. So, has the whole market boomed or what's going on? And that brings us to question number 3. Top of the market has boomed. Is the broader collector car market following suit? The short answer is no. No, it's not. Globally, when you look at median prices in January 2026 and compare them to January 2025, prices are down about 3.4% when you compare like for like. Now, that is only 1 month of data, so take this with a little bit of a pinch of salt, but there are a couple of key trends that are emerging so far in 2026. The first of those is a constraining in supply. That sounds very boring and very dry, but it is incredibly important. One of the big factors why collector car prices have declined so much in recent years, there's just been too many cars on the market, too much supply out there, too many options for people to choose from. Putting numbers against that, if you look back to pre-COVID, so 2019, the number of cars that are now transacting at auction is well over double what it was in 2019. That is a huge increase in supply, and if demand remains the same, basic economics teaches us prices will fall. Supply, though, in 2026 has potentially shifted. For the first time in years, we have seen supply constrain at the beginning of 2026. It's only 1 month's data, but it's a good sign for the rest of the year. The second trend we're seeing is a big split market occurring between those higher value cars and those lower value cars. At the top end, anything over 250,000, the number of cars selling is up 65% versus the same period last year, 65% up. On the flip side of that, we've seen a far weaker market below that price point. There's lots of factors at play here. I think one of the most important ones is we've seen a real softening in values for cars that in need of restoration, in need of a bit of TLC. The way restoration labour costs have gone, parts costs have spiralled. It was always been the case, but it is far truer now than ever before. If you're looking to buy a car in need of a little TLC, by the time you bought that car, restored it, you were far, far better off just buying a good one in the first place and saving all that money. Maybe you're doing it from a heart standpoint, that's absolutely fine, absolutely justified, but from an economic point of view, it is a crazy decision. The third trend we're seeing is sell-through rate bouncing back. Sell-through rate really simply is the amount of cars that are offered at auction and then actually meet their reserve where it applies and goes and sells. This has been declining for the past few years, although we are just starting to see that tick back up. What does that tell us? It tells us buyers and sellers are converging. In other words, what a buyer is willing to spend on a car and what a seller is willing to let a car go for is becoming increasingly close. Wind the clock back a few years, you were seeing sellers holding on to those COVID high prices, hoping that they would still be able to achieve them. That wasn't the case. Buyers now, in 2025, 2026, are starting to look at cars that are trading at a significant discount to what they were only a few years ago, and starting to come back and go, yeah, this is good value now. Potentially, that's driving sell-through rate back upwards. So in summary, January 2026 has seen globally prices decline about 3%. However, there are some good signs. We're seeing supply constrained, good news. We are seeing a split market though. The top end versus the bottom end of the market are behaving very, very differently. And we're also seeing an increase in sell-through rate. So that brings us on to our final question. Question 4, what does all this mean for the future? What does the future hold? As we said earlier, this is only 1 month's data, so take it with a big pinch of salt. But in our roundup of 2025, we said perhaps there's room for cautious positivity, perhaps in 2026. And I think that statement still holds. The most important factor we highlighted was constraining of supply. Supply needed to stop increasing at such a rapid rate if prices were going to stabilize, let alone increase. We are starting to see the first signs of that in 2026. Whether that continues or not, time will tell, but it's a good indicator that if that can happen, the market will start to stabilize when it comes to prices. The second really interesting thing that makes me hopeful for the future, the rate of decline of prices is slowing. We are seeing that curve bottom out in terms of prices declining. Maybe that's set for a stabilization again into the future. Those two reasons give me confidence that the market is starting to turn in 2026. And despite all of this talk of prices, we always say, buy what you love, but buy it with a drop of data. The most important thing is not what your car's worth, not what your car's worth in 5 years' time, but that you love what is sat in your garage. And also, you go out and drive it. Slightly tricky right now in the UK, given half the UK is underwater and you probably need a boat rather than a BMW. Anyway, hope this video was helpful. If it was, give us a comment down below, give us a like, give us whatever you're meant to do on YouTube. But anyway, peace.